We're recording.
Okay, great. Hello, everyone. My name is Carmen Clark. I work for the Bozeman Public Library, and I'd like to welcome you to our second of 4 financial literacy classes. Today we have Hillary Hansen with us, and we will learn about your credit report and how to make it better. And without further ado, I'll pass it on to Hillary. And I'm going to stop my camera and my sound.
Okay, perfect. It is saying host disabled attendee screen sharing. So if there's a way that you guys can pass that on to me, that'd be great. And I'll pull my slides up.
So because you are a co-host, you should be all set.
Okay.
The only people it's disabling are the folks who are just attendees.
Okay. So tell me this, can you see my screen?
Not yet. Here, let me see. Oh. Here, try it one more time.
Okay, there we go.
Beautiful.
All right, can you see that?
Yes.
Okay.
Perfect.
Awesome. Well, everybody, my name is Hillary Hansen. I work for First Security Bank. I'm a mortgage originator for them, so do home loans for people. And today we will be talking about just understanding credit scores, some tips on how to improve those, just some basics. Carmen invited me to teach this class about a month and a half ago, and I got extremely excited about it. This is a portion of my homebuyer education that always gets lots and lots of questions. So I'm hoping we can answer some of your questions today. Any thoughts, concerns? If you have anything that you don't want to share publicly or via the chat, don't hesitate to reach out to me personally. My phone number and my email is listed on here. So if you don't feel comfortable asking any questions, you can contact me directly. The first couple slides are going to have kind of a fun little Q&A quiz sort of thing. So if you want to respond via the chat, that'd be awesome. It's not graded. It's just kind of to get into things and see where your knowledge sits. And hopefully we'll answer all those questions by the end. So first question, what is the range of credit scores on a mortgage report? So if you want to answer via the chat, that'd be awesome. Let me try and pull the chat up here. So the range is 300 to 850. So 3 being the low end, 850 being the high. So sometimes, we see scores in the 820s is usually about the highest I see. Very rarely do they go up to 850. Just the reason being is there's only one credit bureau that has the scores in that big of a range. So. All right, what are the 3 credit bureaus? Give me a minute to respond. So we'd be looking at Experian, TransUnion, and Equifax. So those are the 3 credit bureaus that generate credit scores that you see, online, or if you apply for a mortgage, those are the scores that come from. TransUnion is that one credit bureau that has the range from 3 to 850. So they have the biggest range. So when you look at your credit score online, what is the name of that credit report? It's kind of a tough one. So that's called your consumer credit report. Consumer credit report is a fantastic way to kind of monitor your scores. I know Credit Karma is a pretty popular one that individuals use to keep tabs on credit. Some credit card companies actually offer free credit checks. For example, I have an American Express credit card, and it gives me a credit check anytime. It's not a hard pull on my credit, but it just kind of lets me monitor those scores and kind of see where they sit. One thing to note with a consumer credit score is that score can actually be higher than what is pulled when you go and apply for, let's say, a mortgage. Mortgage credit report is literally the most extensive credit report that we can pull. And like I said, usually those scores are lower than what you'll see on a consumer credit report. However, keep tabs on it. This is, like I said, a great way just to kind of monitor those scores and see where they sit. So next question, we'll review this a little bit later on. This is a really important piece, but what percentage of your credit score does your payment history make up? Give everyone a chance to kind of respond, see what they say. A big one. I love it. Yes, that's exactly right. So your payment history actually makes up the biggest portion of your credit score, and that is 35%. So 35% of the way your score is calculated is based off of that payment history. You're making your payments on time. How long have you been making those payments on time? Really, really critical, important piece in credit. So now we'll get down into the breakdown of credit. So this is kind of how the credit bureaus break it out. So if have exceptional credit, your scores range anywhere from 8 to 850, very good is 740 to 799, good, fair, and poor. This is kind of an interesting little diagram over here that Experian generated, and it's saying that 67% of Americans have a good FICO score or better. So what we're looking at is 67% of Americans have a 670 score or higher, which is great news. So if you were to apply for a mortgage, some programs, depending upon what you're looking at, we'd be looking at 640 for the minimum credit score. There's some programs that we can go a little bit lower than that, but kind of looking at that graph right there, pretty good odds that you'll be okay for a mortgage. One thing to note, if you're going to apply for a mortgage in the future or thinking about it, 740 is actually a really good target score to get to. At 740 and above, you're not going to have any hits on interest rates. So always kind of keep that in mind, 740 as a target for those credit scores, especially if you're trying to get a home. And so we covered this a little bit earlier, but how are credit scores calculated? So 35% of your score is based on your payment history on loans and credit cards. So again, are you making those payments on time? How long have you been making those payments? Really big portion right there, 35%. The next biggest piece of your credit score is based on your utilization ratio, and that makes up 30% of your credit score. So what that utilization ratio is saying is we're looking at revolving debt here. So credit cards, accounts that you can have that balance fluctuate, the account stays open, it's just a revolving line of credit. And what we want to see is that you use 30% or less of what's available to you. So if we look at simple math, let's say you have a credit card and it has a credit limit of $1,000. So you can spend up to $1,000 on this particular credit card. What this utilization ratio is saying is you want to keep your balance below 30%, or in this example, below 300. Now you don't want to have one card maxed out and everything else at zero balances. You want it kind of spread evenly across, because again, we want to see that utilization ratio below 30%. That will really help your scores. So again, two most important pieces, your payment history and that utilization ratio. The next most important piece is your credit history. So credit history makes up 15% of your credit score. So how long you've had those accounts open. I say it all the time, start early with credit, start early, building up those scores. It will help significantly. So again, good credit history there. And the next two pieces, both of those make up 10%, one of which is based on new credit accounts. So how frequently you're getting new credit. And then the other 10% is the credit mix that you have. So we'll start on this new credit account. So what we're looking at here is, how frequently do you get a new credit card, or how frequently do you get a new installment loan? Every once in a while, it's not necessarily a bad thing to kind of get some new credit lines in the mix, especially, if you're improving those scores. Having that new credit doesn't necessarily hurt. What will likely happen is if you do apply for new credit, you will likely see your scores dip when you first get that new line. It's just how the algorithms calculate those credit scores. What the credit bureaus are saying is, right, there's this new debt available to this individual. How are they going to manage it? Is there, quote unquote, risk that we don't have calculated in the score? So like I said, scores might dip, but it could improve those scores later on. And then the other 10% is the credit mix. So credit bureaus, they want to see, that you can manage a credit card, you can manage an installment loan, so such as like a car loan or maybe a student loan, something different accounts that have different payment schedules. So again, revolving is like your credit cards. You have a balance, pay it off, have a balance or pay the minimum. That, and then those installment loans you make, I have a car payment that's $300 a month and I make that payment every single month. They want to see that you manage those different debts really well. So why is credit important? Lots of people are like, I have cash, I just want to pay cash for it. Debt scares me. I totally get it. However, what happens is if you try to get financing in the future and you don't have those scores, it can be extremely difficult for you to obtain any sort of financing. For example, if you want to buy a home, if you want to buy a car, if you want a credit card, any of these sorts of loans or financing would be really difficult, if not impossible, to obtain if you don't have that credit score. So really, really important piece there is just thinking ahead, what in the future do I want to accomplish and what tools do I need to make that, dream a reality. So first and foremost, I'd say probably obtaining credit is a good, important piece there. Without a credit card, some transactions might be difficult or require extra hoops for you to jump through. For example, renting a vehicle. I know it is possible without a credit card. However, if you have that credit card, it makes it so much easier for, transactions like that. So another piece as to why credit is important. Fraud, we see fraud so prevalent in today's world. People are hacking debit cards and that sort of thing. If you have any sort of fraudulent charges on your debit card, funds that are coming from your checking account, that's taking your money away. If you have to pay rent or something the next month, if you have any sort of fraud on that account, it could really affect, your payments. So the nice thing with a credit card or, some other line of credit, if there is any fraudulent activity, it's pulling from the credit as opposed to your funds. So it just offers you some added protection there. And then a big one, I'm guilty of it, but online shopping. If you're buying stuff online, it's so much safer to have a credit card information out there as opposed to your debit card. Again, just protecting your information, your accounts. And I'm not certain of this, but I've heard the dispute process is easier with a credit company as opposed to with the debit card. But anyways, just some protection out there for you as the borrower or the consumer when you're, doing any sort of transaction like that. So how can you improve your credit score? So a couple different things. Again, the most important piece, make your payments on time. That makes up 35% of your credit score. And, if you make those payments on time, it will definitely help those scores. Excuse me. Pay revolving accounts to less than 30% of your utilization ratio. Again, so if you have that credit card that has a credit limit of 1,000, keep your balance below 300. That's a really big piece there. This is kind of a really important one, but don't close accounts with positive history. Positive history goes away, negative history stays. So what I'm talking about here is if you, let's say, have a credit card that you don't ever use anymore, but you've had it forever, it has really good payment history. If you close that account, that history wipes off your credit report. So you want to keep those old accounts open. What I say is, run a tank of gas through it, let it run through a statement cycle. Next month, pay that off in full. And then, just so that account stays open and active. For example, when I was in college, I had a banker approach me and they said, oh, you're pre-approved for a credit card. At the time, I was so adverse to it. I was like, I don't want a credit card. I feel like I'm managing everything really well. But you figure that card has been with me for several years now, and having that positive history is so important on those accounts. Do I use that card? Hardly ever. Like I said, just run a tank of gas through it, pay it off the next month. But that positive history is so important because, again, 35% of your credit score is made up of that payment history. If you are looking to shop for a mortgage, doing some mortgage plugs in here just because that's what I do, is do mortgage loans. And it's so important in our, industry and in our world here in Gallatin County, that sort of area. it's a hot market right now. So lots of people are interested in these mortgage loans, home loans. If you are looking to shop for a mortgage loan or you're looking to get pre-qualified, you want to be structured with those inquiries. So every time you go and get pre-qualified with a lender, they're going to do a hard pull on your credit. If you do all of those credit pulls within a 30-day window, it will only hit your credit once. So just be strategic with that. If you do, pre-qualification 1 month, pre-qualification the next month, and then a third, you could have 3 different credit pulls. Whereas if you did them all in 1 month, it only hit your credit once. So hard pulls do kind of affect those credit scores. So again, just be strategic in how you're shopping. Another tip on how to improve your credit score, bring any derogatory accounts current. So if you have any accounts that are in collections, pay those off in full. If you have 30, 60, 90-day lates on any accounts, bring those current. Again, it just goes to add up to that payment history. We don't want to see any of those late payments, any negative history out there. So anything that's late or derogatory, definitely bring those accounts current. So let's say you don't have a credit score, super common. What are some ways that you can build credit? First piece is take out a credit builder loan. That's just one tip on how to get some scores rolling. For example, First Security Bank has a credit building loan. Funds get deposited into a savings account. This would be your funds. So let's say you have $1,000, we deposit that in a savings account. We put a hold on those funds, and then you make payments to this loan. Each month you make a small payment to this loan. At the end of your payment period, those funds are released to you. It's a great way just to kind of get some scores moving and established for you. This is a really important one and a great tip. Become an authorized user on someone else's credit account. So for example, I had an instance one time, husband and wife came in to apply for a mortgage loan. Wife had great credit, husband had no credit. And so what happened is the wife added her husband as an authorized user on her credit card, and the husband was able to establish, the wife's scores were high 700s. He was able to establish scores within about 30 days, again in that high 700s. So it's a great way to kind of establish those scores early on. This is kind of an interesting thought, but I've had some individuals, grandparents and parents, add their kids as authorized users. They don't have to have a credit card and use that account, but right away they already have that good payment history. So authorized user, that's a really strategic tool on how to get some scores. Another tip is get a secured credit card. So that operates kind of like this credit builder loan. So you put $1,000 towards this credit card, use it and pay it back, and that $1,000 is available to you. So again, just secured. It's secured with your own money. I am not really familiar with this, but I was doing some research on, how to establish credit scores, and Experian has actually started to accept rental and utility payment history to build scores. What you'd have to do if you're looking at your rental company is your landlord would have to report that payment to the credit bureaus. So again, I'm not entirely sure how that works. I just noticed that Experian is starting to accept that payment history as a way to establish scores. Another tip, start building positive history as early as possible. So to kind of go back on that banker and getting that credit card when I was in college, it was some of the best advice I have ever received. Just because I was able to start building those scores when I was, in my late teens, early 20s, and that history, again, payment history, 35%. So start early. And then the most important piece, and I hate to be beating this to death, but pay your bills on time. I mean, that's the most important thing if you are looking to build credit or need to, kind of help improve your scores. That will be your most important piece there. So I'll open it up to any questions. We kind of breezed through that, but I think it had some really good information. It's all things that I see in my position, either individuals who maybe don't have the best credit or don't have any credit at all. Those are some great tips and resources on how to get those scores improved. So the chat box is a great way to ask questions.
So if I may, I could start. This is Carmen, but I think you already answered the question that I had scribbled down.
Yeah.
So the best way to establish credit are the ones that you have just mentioned. Because I remember way back when that my husband and I paid cash for cars, and I'm talking about, like old used cars when we first got married. And then we wanted to buy a new car and we didn't have any credit, and and they were, like, how did you pay for these cars? And we're like, well, we just paid cash for them. And so it was a little difficult at that time to, I mean, we did get a loan, but it was a little weird, honestly. It didn't really count that we had the cash to pay cash for the cars.
Yep.
So
I see that all the time, Carmen. This is like so common. You wouldn't even believe it. But yeah, lots of people pay cash for stuff. I mean, it's a great way to pay for it. I have the money. I'm going to pay for it, with the cash I have. However, when it comes to those really big purchases, like a home purchase, for example, it's tough to have that amount of cash laying around. So that's where credit really becomes important, is establishing those scores. And like I said, these are some great ways to do it. Those credit builder loans, that's a wonderful way to start. Authorized users, like that example I gave with the husband and wife. I mean, the husband got scores so quickly, what would take years to probably establish, he got within 30 days. So that's a really fast way to get those scores. Secured credit cards is another good option. I'm not really sure of unsecured credit cards. It's worth a shot. I mean, do some research, see if there's some out there anymore, I think, for an unsecured credit card. So, what you typically think of with a credit card, they want to see some sort of credit history out there. But a secured credit card is a great way to do that. Again, just showing that payment history. So,
and you usually do that with your bank, correct?
So credit builder loan, that's something that First Security Bank offers. I think other institutions probably offer something similar. An authorized user, what you do for that. So let's say, for example, somebody has a credit card through Wells Fargo and they want to add an authorized user to their credit card. They'd contact Wells Fargo and have that individual added as an authorized user. And then that secured credit card, some banks offer those. And then I'm sure if you were to go online, some of those big credit institutions like Capital One or American Express, something like that, I'm sure they have some secured credit cards out there. I know if you probably Googled secured credit card, you'd find a whole list of them. Again, what that would be is putting funds in an account and then using that essentially as credit. So I'd say start with your bank. They'd be the best resource for you to go to. They'd have some resources or be able to direct you. So, if you don't have credit, go into your local branch and say, I have some goals. I want to start building credit, and I can guarantee they'll have some options for you. So, great question.
And then one other question I had, but I think you already answered that too. So we tried, or we canceled some of our credit cards to just make it easier.
Yep.
And what I hear you saying is that we shouldn't have done that.
Yeah, I mean, it's not horrible. It's not going to, really affect you. But what happens is any accounts that have good positive history, you want to keep those open. So, if you've had a credit card that you've had forever and it's just at a zero balance and you've made all your payments on time to that, leave that account open, because that positive history gets deleted off your account. So if you've had a card for years and years and years, that history gets wiped out immediately if you close that account. So again, any of those old accounts, you want to keep those open. Like I said, it's not horrible. It's just a tip on how to keep those scores up.
What about, so how long would it take to, I don't know, negate that mistake maybe? I mean, our credit is fine, right?
Yeah.
So, I mean, I'm not worried about that at all, but just for future reference, like maybe we should keep it open instead of closing it. But I mean, this happened a while ago, so I think whatever, it might be done with anyway. But is there like a time frame that might be, I don't know,
yeah,
once you prove it again?
That's a really wonderful question, and honestly a tough one to answer, because it all just depends on the account that you close, how long that history was, the terms of that particular account. Was it a 50,000 credit limit, 10,000 credit limit? All these variables come into play. So it's really tough to, give a definitive like, oh, it will take 30 days. It's impossible to answer, just because honestly, credit scores are an extremely complicated algorithm, the way they pull in all these different variables from the different accounts. Therefore, it's just tough to say. I would say relatively quickly, it's not detrimental. However, you might see those scores kind of come down, and they'd probably recover, like I said, relatively quickly. I wouldn't say it's anything to be like really concerned about. But it's just, to kind of keep those scores up. So
yeah. And then can you just go to the next point where you said be structured in your mortgage inquiries, complete all within the 30-day windows?
Yep.
As it will only hit your credit once. So meaning, let's say I want to take out a mortgage loan, and instead of, I know you said instead of doing one month and then the next month. So why would I do more than one in the first place?
Yeah, great question. So I always say shop mortgage loans. Different banks have different products that they offer. And honestly, all lenders are different. You might have a really good relationship and a good feeling with one lender, and then you go talk to a different one and it's like, oh, I don't really drive that well with them. So when I give my home buying class, I always like to say, shop lenders, see who you feel comfortable with. And honestly, like I said, different banks offer different mortgage products. And so, you might get a better interest rate at a different bank. It's all about being a smart consumer and, finding the best deal that's available to you. And so that's why I say go shop, do some mortgage inquiries, look with a few different banks, and then do that within a 30-day window. So, go talk with 3 different banks, but talk to them in 30 days. They're all going to ask you for the same application, the same financials. So you might as well do it all at once. Save yourself a little bit of work. And then when they pull your credit, if you do all of them in a 30-day window, it's only going to hit your credit as one credit inquiry. Whereas if you were to do one each month, it would hit your credit every time you pulled that credit if it was in separate months. So that's just another way to kind of help those scores remain strong. When we do hard pulls on your credit, so a mortgage credit report is a hard pull on your credit, you will likely see your scores kind of dip. And so that's why I say, consolidate them all within that 30 days, because you'll only have that one dip as opposed to, dip and then maybe come back up and then, just have those scores kind of gradually go down if you do multiple inquiries like that. So.
And then I have one more question.
Yeah, I love it.
What do you think about, I have my own opinion about that already, but what do you think about all the store credit cards? Like you walk into Target and oh yeah, you can get a Target card today, and then you walk into Macy's. Oh, you walk into, you can get a Macy's card today, and Barnes and Noble.
Right.
Wouldn't that kind of like wash out your, like if you're doing too many of those, like wouldn't that kind of wash out sort of your good?
Yep. No, you beat me to it, Carmen. So, every once in a while, maybe every couple of years or so, it's not a bad idea just to throw some new credit in the mix. But if you're, every time you go into a new store, if you're applying for one of those cards, it's going to affect those scores because, 10% of your credit is based on new credit accounts. So that's positive and negative. If you're doing lots and lots and lots of inquiries, 10% of your score is going to be negatively affected. Whereas if you pull in some new credit every once in a while, that can help, just so it shows, the credit bureaus that you can manage more than, just 1 or 2 accounts. And honestly, do the research on those. If somebody offers that to you, look at the terms and read all the fine detail on those accounts. There's such things as like teaser rates, like, yeah, you might be at a certain percentage and then that goes up. So just really do your homework and research if you are thinking about getting one. I personally don't get them very often, if at all. I think I've gotten one in, the length of time I've had credit available to me. So 20 years or something like that. So just be really cautious with it. I personally don't go for them a lot, but However, some individuals, it might be a really great offer. So again, just doing that research is critical on those. But
Are
does that
those,
answer your question?
yeah, are those ones that could help you though? Like if you don't really have very much credit or a good credit score, could they help with that? Like let's say I'm getting a Target card and I do, I make all my payments and whatever. So that would actually help me, right? If I don't have any other credit.
Yeah, definitely. Yeah. So to kind of go back to this slide, if you don't have credit scores, getting your foot in the door and just getting that credit established, definitely. I'd say if you're approved for one and you don't have scores, I mean, obviously pay your bills on time, make that payment, pay that credit card off in full each month. However, like I said, if you don't have scores, this is a great way just to kind of get your foot in the door and get established. So yeah, I'd say if you don't have any, might not be a bad idea just to, again, research the product and, excuse me, if you are qualified for it, just start building the credit based off of that. That's honestly how I kind of started to build credit. When I was in college, I had a checking account at Wells Fargo, and I went in and the banker told me, oh, you're approved for a 1,000 credit limit credit card. And, I was young, I had no credit history, just barely started college and have built scores up from that. So it's not a bad thing, especially if you don't have any scores established. If you're pre-qualified for one and they're offering it to you, do the research on the account and start to build your scores from there. So
Great.
yeah, good questions. I love it.
Thank you.
Kind of along those lines, I had a question too. What advice would you give to somebody who's shopping around maybe for the first time or shopping around for a new card and it's been quite some time? What recommendations would you give to someone in that situation?
So looking at terms, what's the interest rate on those credit cards? That's a big one. Obviously the higher the interest, the more you're going to pay if you're not paying that account off in full each month. So just really looking at the terms, I'd say is a big one. Google is a fantastic resource. I mean, just finding credit cards that are available that way. Again, starting at your bank is a great way. Banks are now offering credit cards and they have some really fantastic rewards programs and that sort of thing, which is another good point is the rewards on those credit cards. I mean, it's pretty surprising what you can actually earn based off of using those accounts. So I'd say, if you're looking to get a new card, start at your bank, see what they have to offer, and then look at some of, honestly, the big credit institutions. They have great rewards programs, and then compare your products from there. It can be a little daunting because I don't even know how many credit cards are available in the world. It's numerous. And so, I'd say just start with a few and kind of see what's out there. And then honestly, after you get pre-qualified, you'll be inundated with junk mail. You're pre-qualified for this credit card or this one or that one, and you can start to see more terms and offers that are available that way. Yeah, I'd say start at your bank if you are looking for a new credit card. So
Sure, that's great because yeah, it can definitely be overwhelming.
yeah, like Bank of America, Capital One, Chase, American Express, your personal bank, Wells Fargo. I mean, just the list is crazy. So yeah, just start at your local institution and they'd be able to guide you. If they don't offer a credit card, they might be able to give you some insight. And so yeah, great question. Did that answer?
Yeah, absolutely. Thank you.
Okay. Yep.
And so I don't think we have any other questions in the Q&A.
Okay. So let me go back to my first slide just with my contact information. So if anybody has questions, like I said, credit is a sensitive topic. So if there's something that you didn't want to ask in front of the group, please don't hesitate to call me or email me, and I can get back with you on those questions or be able to guide you on some resources that you can get to, because like I said, credit is kind of sensitive, but it's an important thing and it's good to ask the questions. And I'm a huge advocate of knowledge is power, so knowing what's available to you. So yeah, don't hesitate to contact me. So
well, great. Thank you so much for that offer.
Yeah.
Um, and thank you for this great presentation.
It was my pleasure. Thank you.
Yeah. And like I said, we will be posting that on our YouTube channel probably by tomorrow. And so people will have a chance to watch it then as well.
Awesome. Cool. Well, thanks, Carmen.
All right. Thank you so much.
Yeah. You guys have a good afternoon.
Yeah, you too. Bye-bye.
Thanks. Bye-bye.